All right, so I wanted to go over my trades for the week ending May 21st. So the trades that I've closed. So total profit for the week is 353 US. I've got 4 trades here that I closed. So let's begin. So the first one here is Lightspeed. It was a naked put. It was an earnings trade. So I opened May 19th right before earnings. And this one I actually let expire worthless because the trade ended up being a good winner. So let's look at the chart here for Lightspeed. So May 19 is right here. So as you can see right before this jump here, I sold the 50 put for earnings. May 21st expiry. So same week expiry. The stock was trading at around 56, 57. I sold the 50 put for $1.45. And it was actually not the best entry because later that day, that put was trading for $2. Regardless, I got in for $1.45, and then the next day, got lucky, the stock jumped. So definitely my put option was worth 5 cents. I could have closed it for 5 cents, but then I'd have to pay $5 plus commission, so another $5. So that would have been $10, given that I only collected $1.45. So I decided to let it expire worthless since Lightspeed was way out of the money, or my put was way out of the money, and Lightspeed jumped to 65, and even the next day it jumped to 70 on expiry day. So I let it expire worthless, and so that gave me a net profit after commissions of $139 US. Now, of course, when I play earnings, I have no idea where the stock's going after earnings, so I'm not picking direction. It's just that from experience, I noticed that the put side wins more often, so I just always sell the put side regardless, and it gives me room to be right. I mean, the stock was trading at 57, my short put was 50, so the stock can still drop and I can still win. But luckily this time the stock jumped, so that allowed the put option to be completely safe. But yeah, so I'm not picking direction. I just always sell the put side, and it just happens to, this time it just happened to jump like crazy, making the trade a complete winner. Now, how much capital required for this trade? So it was a naked put at a 50 strike, and the stock was trading at 56. So if I use my buying power calculator here, so Lightspeed has a 30% margin requirement, so 30%. The strike I said was $50, and the stock was trading at 56. So it took about $1,000 of maintenance excess to place this trade. Next here, I've got Snap. It was a 49 put. I sold on May 5th. So let's look at the chart for Snap on May 5th. Snap. May 5th, we're gonna have to look at a month. So May 5th is right here. Okay, so this is Snap. Yeah, okay, I think I sold it on May 4th then. What does it say? Yeah, May 5th. Okay, so I sold it on May 5th. The stock had gone from 59 to about 53. Looks like I sold it the next day, or even, yeah, I sold it around 53. But I sold the 49 put when the stock dropped. But it did drop some more afterwards, but I just held on to it, and then when Snap came back up again, I was able to close it for $1.05 on May 20th. So if we look at May 20th, the stock is trading at 55. So the stock went from 53 to 55, and time passed by. That allowed me to sell for $2 and buy back for $1.05, giving me an $83 net profit. Now, it's funny because the same day I closed for $1.05, if I just held on to it, it was worth 75 cents. So it could have made more profit. And even the day after, it was worth even less. But regardless, you can't control that. So that was this trade here. How much capital required for this trade? So if we go back to the buying power calculator, it is a 30% margin requirement stock. The stock was trading at around 53, and I sold the 49 put, so the strike 49. So it took around $1,200 or $1,200 of maintenance excess to place this trade. Next here, I've got a triple Q put spread. So this is part of the put spreads that I try to open every Monday, Wednesday, Friday on the SPY or the Qs. Now that I just happened to open it on the Qs because they dropped a lot. If we look at the chart of the Qs, so we said May 12. Can I do 5 days? Probably not. Yeah, May 17. So I'm going to do 1 month chart. So May 12 is right here. So exactly at the lowest point in the last month for the Qs. So that was a very good entry. So on May 12, when Qs were trading at 317, I sold the 295 put spread for June 9th. So 28 days of expiration. And so basically I win on this trade as long as the Qs stay above 300 by June 9th. But as time goes by, if the stock goes up or even time goes by, this 80 cents drops in value, and it happened to drop to 25 cents by May 20th, but that's because the stock, because the ETF went up. So May 20th, as you can see, the ETF is trading at 328. So that allowed me to close it for 25 cents. So it's actually a good trade from 80 cents to 25 cents. But in terms of profit, dollar amount, it's not great because of the commissions and because I only did one contract. So that it gave me $42. But I mean, if I had done 2 contracts here, let's test. If I'd done 2 contracts, it would have been $94. It would have been decent if I had done 2 contracts. But it's still something that I'm just trying to re-enter and test, like prove the concept. And as long as it's showing me profit, then I could slowly, gradually add more contracts to it. But it's a type of trade where if the 300 strike is breached, I'm not going to try to save it. I'm going to take the loss. So that's why it's not very easy to place or to hold on too long. So when I saw it drop that much, I had to close it. That I did. So that gave me $42 net profit. And then finally, the fourth trade that I closed this week was another put on naked put on Lightspeed. But that one was open a long time ago. It wasn't for earnings. I opened it May 4th. So let's go back to the chart, May 4th, Lightspeed. So it wasn't the best entry, especially since Lightspeed continued to drop after it. But I held on to it because it was a naked put and I still had time on the trade. So I said it was May 4th, so it was around here. So it was considered a red day for Lightspeed because it was trading at 70 and then 65. And then when it dropped to 63, I decided to sell the 55 put right here. But I accidentally went for August expiry. I meant to do June expiry, but I accidentally went for the August expiry. Wasn't a big deal. I still collected $4. It puts my break even at 51, so 55 minus 4. Plus, I have until August, so I wasn't too worried about it. But it was an accidental trade in terms of expiry. But what helped me is when it went up after earnings. And when it jumped up after earnings, when it shot up after earnings, I was able to close the trade early. So I closed it May 21st. I didn't have to wait till August. And I closed it for $3. I didn't go for 50%. I closed it for $3, which gives me my $1 profit. So after commissions, that's $88 US. So that's why the total for the week was $353. And now the capital required for the triple Q put spread, because it's a put spread, it's defined risk. So it's simply the width of the strikes minus the premium collected for opening the trade. So it's actually just 300 minus 295, that's $5, minus 80 cents, that's $4.20, times the number of contracts, so that's $420. That's the capital required for this trade. And then for this trade here, it's going to be similar to this one. So it's a naked put at a 55 strike. So I go to my buying power calculator. Lightspeed is a 30% margin requirement stock. Now, the stock was trading at 63 when I did that trade. And I sold the 55 put. So it took about 1,100 of maintenance excess. But then at some point, the stock dropped to 56 while I was still in the trade. So it went from 1,100 to almost 1,600 of maintenance excess required or capital required to place this trade or even hold on to the trade. Yeah, so these were my trades for the week. Now I still have about 32 trades opened, but I'm going to go over them in my portfolio update. And I guess the one that's really bothering the most, I mentioned it last time, is Spotify here. A naked put at a 250 strike. And I think Spotify's trading at around 230. So let's look at the buying power required. So the strike is 250, the stock's at 230. So it's taking about 8,900 maintenance excess. But at some point, the stock was at 215 almost. So at some point, it was taking almost $10,000 of capital required. And yes, Spotify is a 30% margin requirement stock. So if we look at the P&L for May, and let me just make sure this is refreshed. I think it is, yeah. So P&L for May is 907, but we still have one more week to go. Actually, 1 week and 1 day. So six trading days to go. Actually, I think to 24th might be closed. I'm not sure yet. I'll have to check. All right, so we've got a week to go still. But yeah, you could definitely see that it's not as good as January, February, and March. April was half of March, and then May probably won't even be as much as April. But yeah, given that I've got a lot of trades that are in trouble, I guess I can't complain that I was still able to make almost a little bit over $1,000 Canadian by selling options. Yeah, so that's my P&L for May for now, and these were my trades. So if you have any questions, leave in the comment section below. And like always, if you want to join the trade alerts group on WhatsApp, where I send these trades live, it's $25 a month. The link is in the description below. And like always, if you can open an account with Questrade to trade on the stock market, use my referral link below to get $50 in free commissions. And if you enjoyed this video, click the like button, share with a friend, and subscribe to the channel. Thanks for watching.